即開會啦。
Okay, meeting is now called to order. First, confirmation minutes and matters arising. Minutes of the meeting on the 16th of October has been sent to members, and up till now, Secretary has not received any proposed amendment. So, shall we confirm the minutes? Okay, there is no objection. Minutes confirmed. Information papers issued since the last meeting. 5 of them, and they have been listed on the agenda, and they have been sent to members. Third item, date the next meeting and items for discussion. On the 19th of November, there will be a special meeting at 10:50. At 11 to 12:30, which is a briefing by the HKMA. The next regular meeting is the 3rd of December. In the morning, the administration proposes 3 items. The FS will update us on Hong Kong's latest economic situation. Second, consultation on the budget for 2013 and 14. And then the proposed legislation to reform the trust law. 3 items. Do members have any comments? And it does take a lot of time to cover these 3 items. Therefore, I propose that we start from 9:30 in the morning until 1. So please take note of this change. Right. Item 4. Proposed legislation to facilitate development of an Islamic bond market in Hong Kong. Since it is a legislative proposal involving the IIRO, other members have been invited. Members who are not of this panel have been invited to attend today's meeting for this item, and the papers have been issued to members.
如果政府當局準備好清
The officials, please start your briefing if you're ready. Thank you, Madam Chairman. With regard to developing the Islamic bond market, under our Inland Revenue Ordinance, there may be quite a lot of tax burden in comparison with the traditional bonds. Our legislative proposal is to remove such barriers. And we have consulted the market and members of the public on our proposal. I will invite my colleague, Mr. Liu, to brief members our thinking. Yes, please. Thank you, Madam Chairman. I'm glad to have the opportunity to brief members on the administration's proposed legislation to facilitate development of Islamic bond market in Hong Kong through amending the through introducing the Inland Revenue and Stamp Duty Legislation Alternative Bond Schemes Amendment Bill. This is to promote the development of Islamic bond market in Hong Kong. Our policy, of course, is to help diversify products and services available in Hong Kong and consolidate our status as an international financial center. Although there is the impact of the international financial crisis, the Islamic asset market has been growing very rapidly. Islamic asset market has reached the tune of $1.3 trillion in 2011. Some investment institutions, in order to diversify their holdings, have a rising demand for Islamic bonds. We've observed that the issuance of Islamic bonds have increased by 40% year-on-year in the first half of the year. and the amount of outstanding sukuk will exceed $220 billion by the end of this year. Hong Kong, as an international financial center, is capable of matching the fundraisers with the investors in the Islamic bond market. We therefore would like to develop Islamic financial products. As for the Islamic product or sukuk, is a broad range of financial instruments designed to conform with the principles of Islamic law or Sharia. The Sharia prohibits the taking of interest, and the creation of purely debt-based sellable securities is therefore not possible. And in order to issue sukuk, the issuer, or rather the originator, has to start a special purpose vehicle, and through many layers of asset transfers, bonds can be issued to investors. And under this kind of structure, because there are many levels of transfer, and also the setting up of the special purpose vehicle, there will be implications of stamp duty and property duty, property tax, so on and so forth. The purpose of the bill is to remove the barrier of issuing sukuk in Hong Kong. We would like to provide a comparable tax framework for the sukuk vis-à-vis the traditional bonds. The purpose of the bill is not to provide any special treatment to the sukuk. The purpose is that since financial instruments are of similar nature, they should be given comparable taxation treatment. In the past few years, we've done a study. We've observed that in Malaysia, Singapore, UK, Japan, relevant France, laws have been amended to clarify the various measures to facilitate the issuance of sukuk, so that a level playing field is provided to comparable instruments in terms of tax treatments. We therefore want to amend the IRO and the stamp duty ordinance to provide a comparable taxation framework for sukuk vis-à-vis conventional bonds. And we will cover 5 most common types of sukuk in the global market. And last year and in the first half of the year, about 95% of the global sukuk issuance belong to these 5 categories, and they are ijara, or lease arrangement, or musharaka or mudaraba, profit-sharing arrangement, and murabaha, purchase and sales agreement, and wakala, agency arrangement. These are common sukuk, common types of sukuk. As for wakala, which is an agency agreement, this was proposed during market consultation, and we have incorporated this in the bill. Since the types of sukuk, new types of sukuk are coming up all the time. We need to keep pace with the market. We need to have a provision to empower the financial secretary to expand the coverage of eligible alternative bond schemes to meet evolving market environment. Let me give you an example of how the Islamic bonds or sukuk is done, and why there are additional tax liabilities. This is an ijara arrangement. The originator wants to raise fund, and therefore it sets up a SPV, which is the issuer. The SPV is set up for the purpose of issuing bonds. The SPV takes money from the bond holders or investors, and then the bond issuer will buy assets. The assets are then leased to the originator. When there is lease, there must be rent. Rent is then paid to the bond issuer from the originator, and the rent will become the coupon payment, just like the conventional bonds. And upon the conclusion of the bond, or maturity of the bond, the asset will be sold to the originator, and the money obtained will be used to redeem the bonds. That's the arrangement of the ijara. Under this arrangement, you can see that there is a number of transfer of immovable property, and there will be a stamp duty, and also the coupon payment is not interest, strictly speaking, under the Sharia. It is distribution of profits and cannot be exempted from profits tax. The originator charges a rent, and therefore SPV charges a rent that will have to pay property tax and also profits tax. And the relevant tax exemptions are not applicable to sukuk, because we cannot provide such exemption. Because of this specific model of the sukuk, the transfers of assets arising from that will subject to different kinds of tax liabilities under the Hong Kong taxation law. We therefore want to exempt such tax burdens so as to provide a comparable tax framework for the sukuk vis-a-vis traditional or conventional bonds. We will set special conditions to make sure that we get the right type of bonds. The bond is traditionally, or rather, the bond in terms of economic benefit is no different from conventional bonds, and there are also reasonable steps to avoid tax, to prevent tax avoidance. We also wanted to promote the financial market development in Hong Kong. So there must be a Hong Kong link. Let me give you an example.
The first condition is a limit on return condition, which means that investors under this ABS would receive a bond return which must not exceed an amount that would be a reasonable commercial return on money borrowed of the amount of the bond proceeds. And secondly, we will also require the originator and the bond issuer to shoulder the financial liability as defined in the Hong Kong Financial Reporting Standards or International Financial Reporting Standards, and the maximum term length condition, and also the arrangements performed according to tenor condition, and the bond issuer as an SPV must return the bond return payable to bond holders. And finally, we would require that the alternative bonds must be listed on a stock exchange in Hong Kong, or issued or transacted in Hong Kong, or lodged with or cleared by the central money markets units operated by the monetary authority. As I said in the beginning, the underlying principle is that under the IRO and the STO, the sukuk or the prospective ABS should receive comparable tax treatment and they will be exempted from additional profits or property tax exposures or stamp duty charges for such purposes. And the coupon payments payable by the bond issuer to the bondholders are to be regarded as interest payable on such money borrowed. And as set out in the paper, it means, we have set out in the paper the implications under the relative ordinances. Now, for example, if it's regarded as interest payable, it means that according to Section 12(2)(f), it will be exempted for the purpose of paying interest, and also the cost of acquiring assets will be regarded as money borrowed, and the investment return will be regarded as the interest payable, which means that the profit tax, stamp duties, and the property tax incurred would be exempted in the course of asset transfers. And between March and May, we conducted a public consultation on the draft provisions to be included in the bill, and we received 15 submissions. Most of the responses supported the legislative proposals, and we'd like to welcome the various organizations or financial institutions or professional bodies for submitting their responses. And many of these comments have been taken on board in the drafting of our bill, and we've also issued a consultation conclusion to address the suggestions and comments on the 29th of October. And in our consultation conclusion, in response to the comments received, we relaxed several conditions. First, we expanded the coverage to include agency arrangement. We've also relaxed the maximum term length condition by changing the maximum term length requirement for a qualified bond arrangement from 10 to 15 years. We've also increased the flexibility of the condition, and that is the connected with Hong Kong condition. If the bond is lodged with or cleared by the CMU in Hong Kong, it will also be included. And we have removed the diverse holding condition. We have suitably relaxed the proposed record-keeping requirement for the bond issuer and the originator. Our way forward is to finalize the Inland Revenue and Stamp Duty Legislation Alternative Bond Schemes Amendment Bill as soon as possible. We aim to introduce the bill to the LegCo in early 2013 for first reading. Now, so much for my presentation. We're happy to take questions from members. Thank you, Chairman. All right, 5 members have indicated the wish to ask questions on this topic. Questions are welcome. So 4 minutes each for questions and answers. First, Mr. Chen Kem-lam. Thank you, Chairman. Madam Chair, Sukuk as an investment instrument has been developed for a long time. However, it has not been developed in Hong Kong, and some neighboring countries have promoted the development of Islamic finance, covering quite a wide range of products. Now, for this Islamic financial investment product, well, it may not be as complex as other structured products like the Lehman Brothers. However, The structure is such that it has to comply with the Islamic laws, and there are things that we're not familiar with, and I think that we should take note of several things. First of all, in order to introduce Sukuk in Hong Kong, apart from setting up a legal framework, we also have to groom talents. Because if we're not familiar with the investment environment and the structure of the products, we may encounter problems. The other point is that for Hong Kong investors, in particular small investors, are not familiar with the environment or investment environment in the Islamic countries. And for the originator bond issuer relationship, it is quite complex. And normally, for conventional bonds, we don't see this kind of structure or relationship. So when a problem arises, we need to consider this important aspect of liabilities. So there must be some restrictions on the small investors. For example, for non-professional investors should be prohibited from investing this kind of products. And on listing rules for these products, this is important as well. If we don't do this properly at the initial stage, we might damage our market reputation instead of introducing more diverse products in our market. So the administration should tell us what plan they have as far as the market is concerned and what protection can be offered for our small investors. Administration. Thank you, Madam Chair. Thank you for members' views. This analysis is very accurate. May I say that this is the starting point, and legislation is a very important complementary aspect. And we have heard quite a lot of support from the market that we should develop Islamic finance, and Islamic bonds or Sukuk is one of the major starting points. As far as regulation is concerned, Sukuk is not different from conventional bonds as an investment instrument. On the one hand, it will be covered by the SFO as far as the sales and marketing and offer to sell activities are concerned. And there are also disclosure requirements. Now, as far as Sukuk products are concerned, in the past, there were Sukuk products in the market in Hong Kong, and they target institutional investors. And if they are they're targeting institutional investors, they can apply for a safe harbor under the law. This is one aspect. That means they will be covered by the laws and regulations in Hong Kong. On the other hand, we also attach importance to the grooming of talents. And over the past years, the HKMA has done a lot in this regard. I will defer to the representative from HKMA, Mr. Ho, to say something in this regard. Over the past few years, the HKMA has stepped up training in this regard and also exchange in terms of the development of Sukuk. And from time to time, we hold seminars for public's understanding on Islamic finance. And in 2008 and 2009, the HKMA, together with Dubai International Finance Center and the other institution, we signed, and that's the Central Bank of Malaysia, we signed an agreement, and we plan that next year a seminar will be held in Hong Kong, and representatives from the financial sector of Malaysia will be invited to host a seminar, and we aim at stepping up exchange and cooperation. And we also take part in the activities and the events to understand more about the development of Islamic finance. And we also keep close liaison with the market to understand the market's needs in order to help them roll out new products and services. Next, Mr. Ronnie Tong. Thank you, Madam Chair. Well, just now I paid attention to the administration's presentation. I understand. May I ask whether investors are confined to Islamic religion? Now, you said that one of the conditions is that the bond return should be comparable to the return of conventional bonds. They will not be given preferential treatment. And in your paper, a condition is imposed to restrict the investment return. And I'd like to know if this is going to happen in reality. Say, if this bond yields a low return, of course there won't be any problem. Well, because other investors may think that they prefer conventional bonds which yield a higher return, then so cook. But if the bond return is high, then will the fund manager become the only party to benefit from the scheme? Would it be unfair to investors? So can you say something more about this condition? I find it quite hard to accept because it's unfair in the market. Of course, we prefer investment instruments with higher return. If you restrict the scheme such that the return must be comparable to conventional instruments, can you say something more about that? P.S. Thank you, Madam Chair. We have considered this aspect thoroughly as well. Perhaps I'll defer to my colleague to elaborate more on this point and to explain our considerations. Yes, Mr. Ng or Mr. Wong, Deputy Commissioner. Sorry, can't hear. Have you switched on the mic? Please speak up. Yes. About the first question, we do not ask that investors must be Muslims. Well, in our paper, we have included some Islamic names, but as far as the bill is concerned, we're going to use religion-neutral terminology. And as far as return is concerned, the arrangement is that it will be similar to conventional bonds. We will look at the term and the amount and the credit rating of the bond issuer. And we will draw reference from the market and see if the level of return is similar to the conventional bonds.
When a bond is issued, there is a prospectus put up in the market, and people will be informed of the rate of return. Now, if we look at the yield, if we look at the prospectus and the yield, and then we make reference to the going interest rate at that time, So we can see the nature of such an issue. And we can see that the yield may be similar to that of the interest for a loan. I do have financial advisors, and I prefer stable yet high return bonds or high yield bonds. Well, if everybody is just providing a yield of 5%, there is no competition at all. And, Madam Chairman, what about the secondary market, and how do we define them in the secondary market? I think that's difficult. Now, when the issuer issues a bond, it is for the issuer to design the bond and what the return will be. Perhaps I have not put myself clearly. Suppose an issuer wants to be very successful. He makes an offer with a yield higher than that of the market, the going market rate. Will you impose a restriction on that? The higher yield may not be the result of the tax concession. Maybe the investment is very good, and therefore the yield is good. It is not related to the tax concession, and you shouldn't therefore penalize the investors or the issuer. Perhaps Mr. Ho can explain that. Is it getting through now? Now, the first concept is, why should there be a restricted rate of return? The purpose of the scheme is to make the environment of Islamic bonds similar to that of conventional bonds. We need to look at the structure of the sukuk, whether it's really a kind of bond. And an assessment is whether the rate, the yield is similar to that of a conventional bond. The explanation given by the IRD is that if there is an issuer who wants to issue a sukuk, then we will look at the rate of return or the yield in the prospectus, and then we compare that with a conventional bond with a comparable issuer and a comparable tenor. And if the rate of return is similar, then we have the reason to say that this sukuk is similar to that of a conventional bond, and we cannot say that a sukuk is exactly the same as a conventional bond. Now, if the return is much higher, then we can say that it is likely that it is not comparable to a conventional bond. We need to assess its economic nature to see if it is similar to a conventional bond. You need to be quick because many members are in the line. Now, the restriction is only in relation to the primary market, but in the secondary market does fluctuate, and we will not impose any restriction in this regard. Mr. Chan Kim Paul, Hong Kong is an international financial center. If we have many more types of bonds introduced in the market, that should be welcomed. The present proposal is to exempt property tax, exempt additional property tax, additional stamp duty, and profits tax. But any financial instrument can be used for money laundering. Is there any are there any provisions to deal with that, and also to deal with tax avoidance? The second point. It says, in fact, in 2007, the former CE mentioned Islamic bonds in his policy address. Many years have elapsed. Why the progress has been so slow? Apart from taxation issues, are there other hurdles? And are we too slow? Because Malaysia issued the first sukuk denominated in renminbi last year. So they have started ahead of us. How can we catch up? The policies, the Secretary, we did spend some time on drafting the bill. The product structure is rather complicated. You can see that from the briefing. And we've consulted the market, and we get general support for embarking on the sukuk. And we therefore draft the law. And we are going to include the 5 types of sukuk and incorporate them in the law and couch them in legal terms. And there are difficulties. Now, concerning the draft bill, the coverage in comparison with the laws in Singapore and UK will be wider. Now, they deal with the already listed bonds, but we will include the listed and the unlisted Islamic products. We agree that we are a bit slow, and we are working hard on that. We are in the advanced stage, and we hope that in the first quarter of next year we'll introduce a bill into this council. As for measures to prevent tax avoidance, there are several conditions in the which will be set out in the bill, and Mr. Wong can explain that. As for the rate of return, that's the limit on return, that is one condition, and we also have other requirements. If they no longer qualify or they no longer meet the qualifying conditions, then the IRD may go after the issuer to recover the tax, and the product has to be a bona fide Islamic financial product. Mr. Wong. As said by Mr. Liu earlier, we set several qualifying conditions, and these qualifying conditions are to make sure that these sukuk are comparable to conventional bonds, and therefore they will be given similar tax treatment. And people may worry about this people may worry that this complicated products will be used as means for tax avoidance. We have provisions in the law to specify the nature of the sukuk and also to prevent any tax avoidance. Mr. James Tian. Thank you, Madam Chairman. The idea was first mooted by Mr. Donald Zhang in 2007, the former CE. Is the CY government also convinced? Mr. Zhang wanted to overtake the United States and the UK, and he liked new products. But he, after 5 years, he has not yet been successful in introducing this product into our Hong Kong market. Now, with the new term of the government, do you still want to have it? And concerning these products, will they be for the retail sector, or will they be for the institutional investors? If they are for the institutional investors, then they will not repeat the Lehman Brothers incident. Now, concerning the rate of return, if there is a limit on the rate of return and it's so complicated, what's the point of having it? Concerning the 15 or so response, are they related to the Middle East or the Muslims? The majority of the people of Hong Kong are Chinese, and they are not Muslims. Why should we have these products? Now, in the CE's electoral platform, he also mentioned developing the bond market, but he didn't mention the Islamic bond market. With regard to deepening our financial market and having more varieties of financial products, these are in line with the introduction of the Islamic financial products. Now, we have made a consultation with the market, and we've obtained support. Is it generally supported by the public? Well, ours is a public consultation. Have you obtained the views from the general public, and do we get the support of the general public? Concerning the views received, they are mainly coming from the financial institutions. They are mainly financial institutions, and individuals did give views to us. And we've also noticed that the Islamic groups in Hong Kong have given their views to the CE's office, and they hope that Hong Kong will develop Islamic financial products. What will be the turnover in a year, according to your estimate? Now, concerning Islamic financial products, we are just at the starting point. We notice that in the stock exchange, there are 6 products, 6 Islamic financial products listed. It is mainly market-led. It will be influenced by the prevailing investment climate and market conditions. Well, have they estimated the turnover? Well, I just want her to answer my question. You must have done a projection, say in 1 year, 5 years, or so what. Please answer your question in a focused manner. What will be the projected turnover? I don't want it to be much ado about nothing. Now, the world Islamic financial market has reached about $1.3 trillion. It's difficult to forecast how much will be issued in Hong Kong. But our assessment is that the trend is to invest in emerging markets, including China. And we've noticed that there is oil money. Oil money has accumulated a lot of wealth, and there are many wealthy Middle East investors who want to increase their holdings on Islamic products. If our investment platform can provide Islamic products, then the Middle East investors can invest on such Islamic products. If our products can provide some opportunities for them to invest in China. Now we can observe that there's a trend for Islamic products. 7 members have indicated they want to speak out, to draw a line there. Do any member want to ask questions? Ms. Abraham Sheikh. Mr. James Tian has asked a very pertinent question. I want to follow that up. I've not heard the answer to Mr. Tian's question. Now, you have consulted for so many years, and only 15 responded. And among them, are there any objections? If there is, what's the reason for the objection? And in the paper, I have not seen that. You only say that they support. But what do they support? That's the first question. Now, the product is very complicated. What I welcome people coming to Hong Kong, doing business. Now, this is an Islamic product. It is based on the Sharia. How much do you know about the Sharia? And if there is any conflict with the Sharia, will the Hong Kong law prevail, or will the Sharia prevail? Now, when you accept it, it is an Islamic bond. It is under the Sharia. And you are putting our law or the basic law under Sharia. Is there such an implication? That's the second question. And my third question is this.
Just now, Mr. James Tin put it very correctly. What is the contribution to our local economy? Well, you can't tell the annual turnover, but can you say something about the incentive? And you say that this is a market with huge potential. And another point, for Islamic bonds in UK, France, Malaysia, London, France, and Japan, they all have Islamic bond products. Now, can you tell us the overseas experience? Was it successful in Japan? And in London, there are Muslims, and in France and Malaysia as well. Malaysia is a Muslim country. So there are reasons for such products to be available in these countries. But what about Japan? And you just follow suit? Have you considered the necessary legislative amendments? I'd like to hear your explanation. Fourthly, Sukuk is not just an investment instrument. It belongs to the Islamic religion or the Muslim culture. If you introduce Sukuk, you have to think about the number of Islamic schools and mosques. And how many Muslims can you attract to Hong Kong? Because there are many Muslims in Malaysia, in France, so on. But do we have the infrastructure? We shouldn't just blindly follow the overseas examples. So you haven't been able to answer Mr. James Tin's question on the contribution to our local economy. I'll defer to my colleague. So I can report to you the result of the public consultation. We received 15 responses, 14 of which welcome the proposed legislative amendments. Madam Chair, I don't wish to waste time. Please give me a reply in writing. We can supplement the answer in writing, and we can briefly reply to one of Mr. Abraham Sheik's question. Only one response received showed concern or was doubtful about the Islamic bond. So the response did not support the legislative proposal. The majority of respondents welcomed the proposals. Okay, so you only received 15 responses. Please reply in writing after the meeting. Madam Chair, I'm sorry. Please ask the administration to respond to my questions concerning other countries as well. Okay, I will ask them to give you a reply in writing. Next member. Mr. Lam. Now you say that the diverse holding condition will be removed as a result of the outcome of the public consultation. Now if this diverse holding condition is removed, how many investors is necessary before you approve the bond product to be made available in the market? And you also say that it will be relaxed as one of the conditions. By how much? Now, as far as the maximum term length is concerned, and also the limit on return condition. Now, if these conditions are breached, the preferential tax treatment for these products will be taken away immediately. Will it be too harsh? Are there any remedial action that can be taken? Sorry, the speaker's off my Sorry, can't hear. Now, in the proposal, the bond issuer and the originator and the related personnel must not hold more than 50% of the bonds issued. And we have removed this proposed condition, this diverse holding condition proposal. And in our paper, we said that when the prospectus is issued, the expected return should be stated, and it will be compared to the amount actually paid. If this condition cannot be met by the bond issuer, we have the right to pursue the amount. But we will allow a period of time for remedial action to be taken so that this condition can be met, so that the amount taxable will not be pursued in arrears. I have a follow-up question from Mr. Abraham Sheik's question. If we have some legal questions on the Islamic laws or the Sharia, and some Islamic elders will have to be consulted, then if we consult the overseas legal body, will it be in contravention with the basic law? Well, the Sharia is not a religion-neutral set of laws, whereas our bill is religion-neutral. As long as the conditions are met, the tax treatment will be given. As for other aspects, the bond issuer or the originator will have to find ways to comply with the Islamic law. And in the course, a committee in this regard may be set up, or the relevant elders may be consulted. Mr. Ng Sing. Just a simple question. In the first half of this year, the issuance amount have increased by 40%. I'd like to know whether there are any particular reasons behind for this year-on-year growth of 40%. Another question. Now it says on page 3, it has to do with the special purpose vehicle, SPV, and multiple asset transfers. I'd like to know how our monitoring agency will deal with these issues, and whether there will be any liaisons with the monitoring bodies in other jurisdictions. And what about the credit ratings and the leasing arrangement? Now, if leverage is involved, page 7, it says that reasonable measures will be introduced to prevent tax avoidance. So, in managing these assets, will a more relaxed approach be taken so that such a large-scale assets will be able to register themselves in Hong Kong? Now, overall speaking, the development of the Islamic economy is quite good, and there is a need for Islamic financial products. It has a global influence, and there are infrastructure projects. from which the need for bond issuance rises. I'll defer to my colleagues to supplement on this point. Now, about the substantial growth for global sukuk issuances by 40% in the first half of this year, there are a number of factors. The economic crisis and the external market fluctuations have caused investors to diversify their investments. So in terms of the global bond market development, this is a growing trend, and this has caused a surge in the issuance of bonds in Asia and Middle East countries. Now, as for the country where we see the most substantial growth, one is Malaysia. The other two is in the Middle East region, including Saudi Arabia and the UAE. And these three countries have seen the most impressive growth for sukuk issuances. Madam Chair, I'd also like to ask about the issuance of bonds. In other countries like Malaysia and UK, they have developed Islamic finance for a number of years. In 2010, the Law Harmonization Committee in Malaysia was set up to see how the laws can be harmonized and with the other laws, and how a balance can be struck. I understand that a report has been released by this Law Harmonization Committee, and its work has been recognized extensively by the global community. And so I think we should draw reference from their work, and we can set up a similar committee to look at the legal aspects. Second point. Of course, legal disputes may arise from Islamic financial products, and UK arbitration is the often taken approach to resolve disputes arising from Islamic financial products. That's because judges may not be equipped with the necessary knowledge in this regard, and professional arbitrators, on the other hand, can deal with this kind of disputes. So professional arbitrators are necessary. I hope the administration would also consider at the same time the development of the arbitration in Hong Kong, and we have the International Arbitration Center in Hong Kong, and better communication should be done with them in attracting professionals to Hong Kong in order to deal with the potential disputes. In 2004, in the UK's Financial Services Authority, the FSA, conducted a comprehensive regulatory review. They looked at the monitoring system and see how they could create a level playing field for all kinds of financial products, including Islamic financial products. So on these 3 points, I wonder if the administration can give me a brief response. Just briefly, we will take on board these views. These are valuable views, and we will closely monitor the situation. Now, about the legal development in UK, in fact, as we were drafting the bill, we drew reference from the UK bill, and we have been in close liaison with our Malaysian counterpart. And actually, Mr. Liu also visited Malaysia, and we had a close liaison with their agency. Now, about legal disputes, apart from going to court, recently we have also set up the Financial Dispute Resolution Center, which targets resolution of financial disputes. We will continue to liaise with this center and keep them up to date on the promotion of Islamic bonds. Now, I understand that the other members still want to ask questions. I urge the administration to communicate with members after the meeting. Mr. Ronnie Tong, you want to ask for the second round, but I thought that members were queuing up, but two of them have gone. I want to follow up on the previous question.
It seems that the administration is saying that it would only gauge the return at the issue of the bonds, Islamic bonds. So if the limit on return, or if the return exceeds the limit, then will you ask the withdrawal of the bond? Or if you don't look at the secondary market, then the concession will last forever. Now we set the conditions, and we want to make these alternative bonds comparable to conventional bonds. The limit on return is one of such conditions. Now we look at the coupon payment. Now if they comply with the rules according to the prospectus, then it will be okay. Basically, it is a loan, and the interest is fixed when the bonds are issued. And the market, of course, fluctuates because circumstances do change. But there is a reference. A reference may be made to the LIBOR. And that is a reference which we will look at. Probably you don't understand my question. Now suppose there is an issuer who can issue bonds of different tenors. Now if you grant an exemption to the issuer, then the bonds issued by this issuer will enjoy this concession. Or say, if other products have a higher yield, a higher return than is limited, then will you withdraw the concession? Now, can you give an answer in writing to Mr. Tong's question? Because two members have asked to ask questions, have returned, and I have to give the floor to them, and we have overrun. Mrs. Eugenie. Madam Chairman, I did pay attention to Islamic bonds in the past. Now, the oil countries have a lot of money, and many international financial centers want to do their business. In Europe, London competes with Paris, and in New York, they also want to do such a business. And the Islamic financial center in Asia is in Kuala Lumpur, and Singapore is more advanced than us in developing Islamic financial products. We are very slow, and we can't compete with Malaysia or Singapore because we have a small Muslim population. We have little understanding of Islam. But experts do point out that as an international financial center, we do need to have a little bit of these products. Say, for Middle East countries who want to invest in our market, they want to have a higher return. If the return is just comparable to conventional bonds, how can that be attractive? Now, in the United States, there are high-yield bonds, the junk bonds, which cause a lot of trouble, and there are risks. And also, how are you going to deal with this? And what about the issuers? Will the HKMA be an example and issue some of these bonds? I don't worry about the secondary markets. As for high return, the I bonds issued by the HKMA are higher. Now, how can you make the Islamic bonds attractive? If you are not familiar with Islamic culture, it will be difficult for you to do the business. Singapore have got their people learn Arabic, and they also get people with the experience. Now, will the HKMA also, and also will you HKMA or will the government send officials to stay several years in the Arabic countries and learn their culture and language? Thank you for your support. We are working very hard to enrich our financial products. The limit on return is members' concern. If the return is too excessive, which is not possible in the market, then the authorities will look into that. And the IRD doesn't want want this to be a loophole for a equity arrangement rather than a bond arrangement, a bond scheme. There will be detailed guidelines for the industry as far as limit on return is concerned. As for issuance, banks, financial institutions, and Islamic countries do want to issue their bonds in Hong Kong, and the Islamic countries have a lot of infrastructure work, and they also want such projects to be financed. As for our advantage, we have an advantage because we have a stable tax regime and a stable legal regime, and offshore renminbi business is also another attraction because we have seen Islamic products denominated in renminbi, and we have an edge on this. We cannot be complacent, of course, and we have a lot to learn. And I also want to take this opportunity to understand Arabic and understand Islamic culture. Now, will the HKMA send people to the Islamic countries and learn Arabic, just like Singapore? As for I-bonds, I-bonds have a high coupon rate, but what about the secondary market? Is there a lot of trading? As for Islamic instruments, are they just capitalizing on the appreciation of renminbi? Can you be simple in your answer? Well, these are just examples. As for training by HKMA, perhaps you can talk to Mrs. Zip after the meeting because we've overrun. Mr. James Toh. Madam Chairman, I have several questions. Has the administration considered the downside of issuing Islamic financial products? Can you tell us the downside, or there is no downside at all? As for tax avoidance, that may be a possible downside, or there is no downside, or is it the only downside? Do you expect that there will be retail products? Now, you mentioned oil money, and it's stable, and they will have money to repay your loan because they are pumping oil from the ground. But that may mislead small investors, and we are scared by the Lehman Brothers incident. And if there is the Lehman Brothers, it is more stable than Morgan Stanley, and you see that oil price is very high. Now, that may be misleading, and then people will flock to buy Islamic bonds. When will you open the market to the retailer, to the retail market? Or at the start, will you allow retail investors? Renminbi is an upside. If we can have more products, more instruments, then we will be able to break the monopoly of denominating the oil prices in US dollar. Of course, it's better to have oil prices in renminbi in order to break the hegemony of the US dollar. That is a positive side, and Hong Kong can play an intermediary role. As for the Sharia, I know that Hong Kong laws can adopt foreign law in judging cases. But if we don't understand that, then shall we just rely on recognizing foreign law when a case is before the court? Do we, at the start, have some people who understand all these and explain that to the government? I don't know whether it is Mississippi. Can these experts explain to the public and the government, should there be any disputes arise? I'm handling some cases in relation to murder and blood money, and it is difficult to understand from the common law perspective. You have limited time today. I hope you can give us further information in writing. The Secretary, concerning the risks, each financial product carries risks. Investor education is very important. Now, after removing the barrier for the issue of Sukuk in Hong Kong, will also step up education of the investing public. Will you allow the retail market, as for Islamic bonds generally, they are for institutional investors. If there is any plan for retail marketing, the issuer will have to obtain the approval of the SFC, and there is a regulation on that. I hope that in the initial stage, please refrain from the retail market. I think you have heard the view. Please also talk to individual members who have concerns and deal with their worries. Now, this is a new product, or these are new products, and people have different views towards such new products. And please follow the matter up after the meeting with the members. This is a legislative proposal. I just want to ask the administration whether members have any view on the proposed introduction of the bill. Now, we've yet to see the bill, and we welcome the introduction of the bill, but we will set up a bills committee to study that. We've spent more time than we've scheduled, and we can see that there are a lot of opinions and comments. The products are new, and different members have different views. Please talk to the members, and when you introduce a bill, I hope that you will incorporate their views into your proposals. Okay, let's move on to the next item on the agenda, and that is information exchange with other jurisdictions, with other tax jurisdictions. The previous item is new, and many members asked to speak, so I allow more time to members. But for this item, I will enforce the time limit strictly. Please refer to paper CB1 91 12 13 04.
Okay,
if the administration is ready, please walk us through the paper. And please be concise because we need to catch up with the time. Thank you. Madam Chair, members, concerning this comprehensive avoidance of double taxation agreements and exchange of tax information arrangements, the relevant proposal and the justifications have been set out in the paper in detail. Well, let me just briefly take you through the objectives of our policy. All along, the objective is to set up a network of comprehensive avoidance of double taxation with our trading partners. And since the amendment in 2006, we have made good progress. In 2010, we signed five agreements, and at present we have already signed 25. And in the course of negotiating with our trading partners, we have gained experience, and also for the development of EOI in the global economy, we need to refine our arrangement. Now, first concerning tax arrangement, when negotiating with our trading partners about the avoidance of double taxation, EOI could only be conducted when there was domestic tax interest at stake. However, in other jurisdictions, the tax system might be more complex. For example, federal and state tax, and the types of tax might be more complex. And according to the agreement, if only the income tax is covered, it may not cover the information concerning the their taxes imposed. So we think that there is a need to relax the criterion in this regard in order to combat tax evasion. Now, at present, our provisions are very strict, and now, if the information generated is before the effective date, then according to the relevant provisions, we may not be able to cater or accede to the request of our CDTA partners. And as far as enforcement is concerned, this is a bit too strict, so we have to refine the arrangement so that if the information is related to tax purposes, and if the information is generated before the effective date, our commissioner can make the relevant arrangements. Well, we understand that there is a concern to protect the interests of taxpayers. So in refining the aforesaid arrangement, we will ensure that the relevant protection will be stipulated very clearly in the provision. And they include the several points. No information will be exchanged on an automatic basis, and there won't be any fishing expeditions, and the scope is confined to taxes covered by the CDTAs, and so on. Lastly, I'd also like to report to members the latest development concerning to exchange of information. Now, in March 2012, the OECD Global Forum on Transparency and Exchange of Information for Tax Purposes conducted a two-phase exercise. And in the Phase 1 peer review report on Hong Kong, our efforts were affirmed, and it was recommended that Hong Kong should put in place a legal framework for entering into a tax information exchange agreement. And as I said just now, our objective is to further promote and develop the CDTA worldwide. However, we also believe that we have the obligation of setting a legal framework for entering into the tax information exchange agreements. We hope that these two agreements will be in line with each other so that we can meet the international standards and fulfill our obligations, and at the same time we can continue to negotiate with other global partners in introducing CDTA, and we'll be happy to take views from members, and at the same time we will start our work on legislation. We hope that by first quarter of next year we'll be able to report to members, and we hope that the bill will be tabled in the Council by second quarter of next year. 2 members would like to ask questions on this topic. Any other? Mr. Sin Chung Kai? All right, if there aren't any other members, we'll draw a line here. Mr. Kenneth Lau. 3 minutes, okay. Just a few questions, simple ones. First, on this exchange of tax information arrangements. Well, the administration can give me a written reply. Is it necessary to amend any other ordinances in Hong Kong? I mean, if this regime is set up for tax information exchange agreements. Second question. Will additional posts be necessary for the IRD if this is passed? Thirdly, after this proposal is passed, will it affect the number of partner CDTAs to be entered into? Will some partners say that instead of CDTA, they will enter into TIEA with us instead? And fourthly, by 2014, the U.S. will introduce a new act, and many banking institutions will have to have exchange of information with the U.S. Treasury. And if the Hong Kong government decides to follow the practice of UK and Spanish governments, so that an agreement will be entered into for financial institutions in Hong Kong to retrieve and exchange information with the U.S. Treasury, then will the EITA cover the information to be exchanged under the Dodd-Frank Act, or the Fed-Cat Act? Okay, let me reply to the 4 questions. Now, when we introduce the legal framework for entering into the TIEA, will it affect the agreement with our CDTA partners? The objective of our policy is to enhance the exchange of information so that we can comply with the CDTA as well as the international standards on exchange of tax information arrangements. When we negotiate with our partners, our major objective will be to enter into a CDTA with our partners. And this exchange of information tax arrangement will be no different from the international practice. And that's why we have to make good use of the time to enhance the arrangement. Now, on the amendment to the IRO, mainly we will amend Section 14(9) and the relevant disclosure rules under this section. And the Commissioner, Vide, present, is subject to certain restrictions, and also we have restrictions as far as privacy of personal data is concerned. So some amendments are necessary. As for additional posts, there will be some rationalization of posts for the purpose of CDTA and TIEA, and if additional posts are necessary, we will consult the LegCo. Finally, about the latest U.S. Act on the provision of information by banks and financial institutions, and the requirement for their counterparts to provide similar information exchange agreements. Well, we think that our agreement on this occasion will be in line with the international practice. And if some financial institutions in Hong Kong have reached an agreement with the U.S. Treasury through the tax information exchange agreements, they will be able to comply with the agreement. And for those which have agreement with the U.S. counterpart, legislation is necessary for bilateral agreement to be in place, and they must provide information to the U.S. Treasury according to the agreement with the U.S. counterpart before they can rely on this TIEA. Mr. James To. My position has remained the same. I'd like to tell the administration as well as new members about my position. We don't have to be overly aggressive. You need to understand that we have a low and simple tax regime. We have low tax rate. If we exchange tax information with other countries, well, other places have far more complex tax arrangements. As for Hong Kong, let me be frank, we use minimum charge. That means the minimum requirement is that we need to comply with the requirements so that we won't be sanctioned. Well, paragraph 6 said that you have yielded fairly satisfactory results, but you need to revisit the current arrangements and so on. Well, I just want to commend your efforts, because it seems that this is the right balance. We should not further expand the proposal, or we should not exceed Western countries and so on and make a big leap. I'm sorry, I can't support it. Hong Kong has a unique system, and this is where our advantages lie. If you say, well, we want to facilitate exchange of tax information and so on, well, this will reduce the edge of Hong Kong. Say, if your amendments are endorsed, does it mean that some more partners will sign the agreements with us? Well, our position is very unique. It's different from others. I think as the present arrangements are already sufficient for us. If you say that without the amendments, some agreements won't be able to enter into, and if amendments are made, more partners will sign the agreements with us. But the thing is, some people will be impacted upon. This should not be the positioning of Hong Kong, so I oppose these amendments. Mr. James To's position has remained very clear. So you note his position. Do you want to give a response? Just a brief one. We note Mr. James To's position and his views, and we will consider these views. We have kept a very prudent and conservative stance. Now, in enhancing the arrangements, the reason is that in the past, when negotiating CDTAs, we found the need to fine-tune the arrangement because it was too restrictive. Now, for example, concerning the time bar, we do not consider any need to change the retrospectivity or the lack of it, which is the present arrangement. And in the agreement, it will be clearly set out, and the types of tax to be covered will be the 3 direct taxes in Hong Kong. And for our counterparts, if they have reasonable requests, and if there are a couple of tax types that should be catered for by our partners, then when we make such provision, we will it will be done on a need basis.
In your paper, you want to relax the exchange of information. If I am an overseas investor, I'm holding grey money, then it will be a deterrent. You shouldn't have introduced this paper. You can continue to sign agreements with the current structure, and that's okay. Unless they force upon you. Now, France and Germany say that because of Hong Kong, Hu Jintao have had to talk to them, and we had to move a bit. But for others, we better not move. Mr. James To's view is very clear, so your legislative proposal has to be very careful. Mr. Sin Chung Kai, my view is similar to that of Mr. James To. The administration has to provide specific information. In those countries listed in Annexes 1 and 2, or Annexes A and B, perhaps I'm wrong. Say in 2008, China signed it. When you ask them, you would get into a black hole. And for those who doing business in China, for those who are doing business in Hong Kong, what benefits do they have after signing the agreement in 2008? It is a bilateral agreement, not a multilateral agreement, right? If the mainland asks us a lot of information, we just yield to that request. And when we ask them, do they give us information in return? I don't know. Having seen these countries, I'm rather scared. Say Vietnam, China, do they really give information back to us? The Secretary. I will answer briefly, and then Mr. Chiu will speak on the actual experience of exchanging information. Concerning the concerns raised by Mr. Sin and Mr. To, we agree with them, and we note that in signing in the CDTA negotiations, many countries, including our major trade partners, raise certain issues. They say that Hong Kong's arrangement is not able to meet international requirements comprehensively. Now we have reached an agreement on the model tax. Now they say that in the future, if Hong Kong can enhance its exchange of information in terms of tax type, they may also adjust the agreement so that the exchange of information will reflect the latest standard, the latest international standard, and Hong Kong's standard. Now, if we do not make enhancement in time, the trade partners may make some reasonable requirement which Hong Kong cannot meet. Mr. Chiu, with regard to exchange of information, when the authorities of the other side put questions to the IRD, we will consider whether the request is directly related to the enforcement of the relevant tax agreement, or whether it is related to the tax laws of that place. We look at objective factors, and they are objective standards, international standards, which we have to comply with. If there is anything unclear, we will seek clarification with the authorities, and we ask whether the information is really related to the implementation of the local tax law or the CDTA. And if they are relevant, if the information is relevant, then we'll provide information. He has not answered my question. The time is up. You can talk to Mr. Sin after the meeting. Mr. Ng Leung Shing and Mr. Mr. Dennis Kwok have indicated they want to speak. Mr. Ng, just 1 minute. The banking sector is not strongly supportive of this, but we generally follows the administration's requirement. And if they do not have adverse impacts on the economy, then we will follow, but we shouldn't be at the forefront of the international community. Economic development in the mainland is very rapid, and if the mainland signs the agreement, Hong Kong has to sign the agreement. And from this perspective, the banking sector hopes that the administration will pay attention to the fact that to the possibility that the signing agreement will increase the operational difficulty of the banks. I think members' views are very clear, and that is to meet international requirement at the minimum level. Yes, Mr. Kwok. No. Okay, then we draw a line there. Okay, the last item. And that is proposed members' bill to amend the Professional Accountants Ordinance. Because of time constraint, let us be brief and precise, and we can only have our meeting until 20 to 1, and without objection from members, I can extend the meeting by no more than a quarter of an hour, if necessary. May I welcome the representatives of the HKIPCA and also the government officials. Mr. Leung, are you ready? Please introduce the paper. Thank you, Madam Chairman. The proposed members' bill is a technical amendment to the Professional Accountants Ordinance. It will be moved under my name as a private member's bill, and I will introduce a bill to the Council in due course. A similar proposal was a similar amendment was indeed raised by Mr. Paul Chen, the representative of the accountancy constituency. There are two parts in the proposal. The first one is to amend the Professional Accountants Ordinance to enable a certified public accountant to incorporate a company with only one director and shareholder and register the company as a corporate practice. This, in fact, is in line with the change of the Companies Ordinance in 2003. Before the amendment to the Companies Ordinance, a Hong Kong company must have at least 2 directors and shareholders. At that time, in the PAO, if it is a corporate practice, and if there is only one professional accountant, then a non-accountant was invited as a shareholder and director of the practicing corporate, of the corporate practice. To keep pace with the change of the company ordinance, a corporate practice will have just a single practicing member as the only director and shareholder. If the corporate practice has more than, if a corporate practice has 2 shareholders, then we suggest there can be a transition of 1 year for the change of the structure. Another proposal in the bill is to prohibit any company not being a corporate practice registered with the Institute to use the description certified public accountant. The initials CPA or the characters Hatsosi in the name of the company. This is to expand the scope of the law so as to prevent members of public being misled into believing that the body corporate is a professional practicing accountant. This is for the protection of consumers. So much for my introduction. And I urge members, happy to answer members' questions. Any questions from members concerning this private members' bill proposal? If I may ask one question, if none, there is none on the floor. Well, I'm also an accountant and member of the HKICPA. I want to ask Mr. Leung and also the representatives of the HKICPA. Is it the same as the proposal made by Mr. Paul Chen? All the wording is the same, except I amended 2 words because of grammar. I want to ask the HKICPA. Now, have you completed the consultation and have you got the support of your members? Yes, please speak. On the first amendment in 2005, we consulted our members at the AGM. And the second, as was the second item, we get the endorsement of the council and we've informed all members. Now, in doing public consultation, because of change over time, there may be different views at different phases. But I think, although the consultation is not controversial, I still ask you to consider letting members know that there is such a bill and let them know the content of the bill. That's only a personal view. Do members have other questions? If not, then we will conclude the discussion of this item. AOB. Anything under AOB? If not, then meeting adjourned. Thank you very much.